Hi, it's Joel Olson here. I'm coming with another variable rate update. So as you know, the overnight rate did go up on the 1st of the month, June 1st. Next rate meeting would be middle of July. So still 6 weeks away until there's another rate change. You know, lots of talk around the idea they'd still move that rate up. You know, really early to say. I think that should be settled at this point. Housing market data continues to go down. Price pressure continues to go down. And you know, we see a lot of data indicating that everything's really slowing down. Rates are meant, you know, moving the overnight rate up is meant to, when you move rates up, you're trying to slow growth, and when you move rates down, you're trying to stimulate growth. And so we're very much into neutral territory, so very doubtful they can do that. Keep in mind, and this is something that people are not thinking about right now, I need to reiterate again that if you pay out your mortgage early for any reason, we are nowhere near a fixed rate being cheaper for you. Even if you've gotten a lower fixed rate, a year and a half ago, you are nowhere near the situation where that would be, where it would be a cheaper situation to have taken the fixed over the variable rate. Because penalties are based on what's called posted rates. Those are moving. You know, there's a lot of things that are influencing that. Secondly, and this is also really important, there is some very logical data and very logical arguments that say, and we've talked about this a few times before, that rates are going up in preparation for a recession. Lots of data saying that we're going towards that. Some pegging it at close to 40%. And so if we go towards a recession, the idea in a recession is they move rates down, padding things in such a way, same way as I keep telling clients, what if I'm a year away from buying a home? What if I know I'm going to lose my job in a year and I just stack money aside for that reason? Similar kind of situation for the Bank of Canada from that perspective. A little bit more nuanced, but that would be something to consider. So people go, well, I would have been better maybe taking a fixed rate. Is that you're forgetting the fact that we have a penalty, and you're also forgetting the fact very well that you would see rates migrate downwards from that perspective. Rates are only going to go up if you continue to have escalating house prices, which gives you a whole other set of things to consider. You know, whether you're going to cash out of the market and take a big amount of money off that, whether you're going to consolidate some debt, and a whole bunch of other things. If you have, if your house goes up by another 30%, what are the other options, that you'd want to look at, which of course makes a variable much, much more attractive when we're looking at those types of things. And so that is something to really be aware of at this point. We're recommending variable. We remain to recommend variable. We did see some bumps on the fixed rate, but we hadn't seen a fixed rate bump for quite some time. And so that is something to think of as well. The last thing I want to leave you with is that I think there's a lot of people that we talk to going, rates are higher across the board, fixed and variable rates, and so that is a reality. It's not something that we can change. We're just saying that as circumstances sit right now, variables remain better, and they have been since 1952, which includes the economic activity of the 1980s, which includes 2008 financial crisis. All these major events factored into that statistic. So. Staying variable is very important, but if you have not had a chat about your variable rate mortgage, things that you're concerned about, because there are things we can do. We can stop the payment from going up. We can reamortize things if you're worried. We can reposition some debt. Lots of things we can do to mitigate rising rates. Even though we can't avoid rising rates, it just means that the strategy of a rising rate is not to lock into a 5-year fixed. That's the wrong strategy, but there's other strategies that we can employ. And if you want to take advantage of that, please do reach out. Let's have a conversation around that, as that's important for us to do. As always, if you like this video, please subscribe, share with your friends. We love to tell about anybody else. We got with a very brave. We'll talk to you soon.